Hello there and welcome to IMTV and this week's news programme. Coming up today, Uralkali causes ructions in the potash market. Imerys strengthens its refractories presence in Asia. New figures show a deepening crisis in mining finance. And how silicon carbide could improve safety in the nuclear industry. First today, leading potash producer Uralkali says it's stopping all export sales through its Belarusian trading arm following a disagreement over export activities. Uralkali announced its decision on the 13th of July, saying its partner, Belaruskali, had violated a trading agreement by making deals outside the partnership, an accusation Belaruskali denies. The shock decision came with a warning that potash prices could drop below $300 a tonne by the end of this year, a result of increased competition in the agri-minerals sector. The news caused widespread panic on the stock market, with many potash companies, including Mosaic, K&S and Intrepid Potash, seeing the value of their shares plunge. Producers and analysts have since hit back at the Russian group's price predictions, saying the forecasts don't match the current supply and demand situation. Integer Research says it doesn't believe Uralkali's exit is a dramatic game changer in the business, while Moody's Investor Service called the market's response to the news an overreaction. Next, and industrial minerals giant Imerys has strengthened its position in the Asian refractories market by announcing details of 2 acquisitions in its second quarter financial results. In June, Imerys bought Indonesia's leading monolithic refractory producer Indopelin, a move which will give the French company its first base in the country. This was followed by the acquisition of Japanese manufacturer Tokai Ceramics through the company's refractories subsidiary Calderys. Imerys CEO Gilles Michel says the Tokai takeover was a strategic move designed to provide Calderys with direct access to Japanese steel markets. Now, the crisis in mining finance deepened in the second quarter of this year, with the amount of new funding dropping by 56%. Figures collected by intelligence firm Intera RMG showed only around $2.3 billion were received by mining firms during the 3 months to the end of June. This was down from around $5.2 billion in the previous quarter. The report said falling metal prices, nervous bankers and risk-averse investors all contributed to the slump, and that the industry now faces a severe capital drought and concerning levels of debt. Both the Australian and Toronto stock exchanges recorded a fall in funding for miners, with London being the only major exchange not to report lower figures. And finally today, scientists at Massachusetts Institute of Technology are investigating the possibility of replacing zirconium used in nuclear fuel rods with silicon carbide in order to prevent explosions. Hydrogen produced from a reaction between zirconium and water is believed to have caused the nuclear blast at Fukushima following the earthquake in Japan in 2011. The MIT researchers reckon by using silicon carbide instead of zirconium fuel rods, the likelihood of a hydrogen explosion can be reduced by up to 1,000 times. The team tested the silicon carbide rods under reactor conditions at temperatures of around 300 degrees Celsius. They found the rods degraded less than the zirconium, making them less likely to produce the explosive hydrogen gas. MIT say the results are promising, but there's still a lot of testing to be done. Now, before we go, a quick reminder to sign up for IM's next roundtable discussion, China's industrial minerals and markets, taking place this September in Shanghai. As usual, you can sign up on the InBin website by clicking on the banner at the top of the page. Well, that's all for now. If you have any comments or feedback, we'd love to hear from you. You can get in touch via Twitter @Indmin or contact us through our website www.indmin.com. Thanks for watching and see you again soon.